Hi, Scott. Yes, we don't see a lot of evidence of tech slowing. If anything, you could argue that it's accelerating. Amazon hit an all-time high this week. Alphabet hit an all-time high. Other laggards like Tesla in the Magnificent Seven saw 11% gains this past month. So we're expecting tech momentum to continue through the summer. I do think we're going to hit some resistance in September and October. I think there's typically seasonal weakness during that time. I think election and uncertainty would also cause some investors to take some profits and potentially rotate into other names.
Are we getting, though, into dicey multiple expansion territory where the fundamentals around these companies just can't keep improving every single week to justify the kind of price action and acceleration we've seen in these stock prices? So how do we match those two things together?
It's been a very unusual time, Scott, in terms of how these companies are performing. It's incredible how companies like Amazon, Nvidia have been able to grow their earnings, not just single digits, but double digits, even despite the size. So I would normally agree with you that how could companies keep up like this? But the reality is that these companies have been so well managed through thick and thin that during times like this, when the economy is growing, they're able to grow their earnings quite significantly. So there's a reason why tech is so large, a percentage in the S&P, is because these companies have delivered.
How much risk do you think is around earnings, which are, look, admittedly, is still a few weeks away, but, nonetheless, I mean, that's going to be a moment of truth.
So far, we're seeing still pretty decent earnings. Micron recently reported. That's probably the most name that's closest to the AI business recently. Yes, the stock dropped on earnings, dropped a couple of percent, but not to be unexpected since the expectations were so high on Micron. Nevertheless, analysts raised their estimates. Micron's news suggested that capital spend is going to continue to increase significantly. So despite higher expectations, we still see these stocks having good long-term views.
I mean, Micron, if you want to go there, I mean, the stock's still down 6% this week, right?
It is, and we expect, we've actually seen a little bit of a pullback in semiconductor names, perhaps not surprisingly so. Expectations are high among many semiconductor names, but there's still names that are, in our opinion, quite cheap. Names like Intel, for example, that are still selling at or below their historical averages in terms of their multiples with upside potential. We've seen some rotation from semiconductor names into software, into cybersecurity, into cloud. Those areas have underperformed semiconductors. Their expectations are lower. So we are seeing not investors getting out of the tech trade, but then just rotating into other industries.
No, I also want to make clear here, since June 10th, you've trimmed Nvidia, right? So you've taken a little bit of money off the table. Tell me about the thought process behind that, even as you remain, obviously bullish on the space.
We have. I mean, we've owned Nvidia for our clients now for several years, even before this, huge AI boost in the stocks. So our clients have done very well on the stock. So for us, it's a little bit more of portfolio management, if you would. Our long-term thesis on Nvidia hasn't changed, but we are taking some chips off the table, not too dissimilar to Jensen Huang's, selling roughly $750 million worth of his stock. So we're taking some profits and redeploying into other names that we think have good upside with potentially, just better valuations.